recording is on. Alright, what a day. What a day. Nasdaq is currently up 500 points, which is insane, really. Okay. Alright, cool. So before I look at the price, the current price, I was doing some tape reading during lunch hour. I was looking at price and seeing what I missed in the morning. Let me go over that real quick before I jump into anything else. So I was looking at the hourly chart. This is the BPR I mentioned early in the morning today. That was the buy side. So in the morning session, what I realized was this down close candle on the hourly chart made these fair value gaps as a breakaway gap, right? And then once price moved higher, also our order block was respected here. On the 15 minute, we got an internal SMT divergence at these lows with ES, right? And price moves higher, created a breaker block here, but he's respecting the breaker block's wick, and then it rallied into the buy side liquidity. On the 5 minute, after this manipulation into breaker, it ran the buy side before I closed the morning session. And that BPR I mentioned earlier gave a reaction, but no SMTs at high here. Pulled back into range equilibrium, which also we have a discount, not a discount, but a fair value gap here. Uses that as a catalyst to rally higher. And there's 5 minute order block here. That was retested. And the 1 minute, that is also the most recent swing range equilibrium discount fair value gap. It rallied from there into buy side, and it's still running so far. Pretty insane day, not gonna lie, pretty insane day. I really don't know how further it can go. But looking at the 4-hour chart, I'll pull that up for you guys. Looking at the 4-hour chart, I mean, this expansion it's insane. Like, there are no down close candles, no swing lows, nothing. I'm still expecting like some sort of like swing low formation on the 4-hour chart. I don't think this buy side all-time high will be taken out today, but we'll see. We'll see. Let me pull ES also here on the 50 minute. Let's go down to 1. $500 points. Yep. Pretty wild. This is probably the first time I'm seeing Nasdaq expanding 500 points and ES expanding almost 100 points. It's been a slow burn though. Like, New York session was rather slow today. To me, this is just a high resistance liquidity run on the when I'm looking at the 1 minute. Too much back and forth action here. not stopping. Where's that buy side? So I'm gonna annotate that as all-time high. So I don't know what it is. Let me just measure it. Another 80 points. I mean, to me, for today, that's not a high probability target, honestly. Yeah, eventually again 3 p.m. Roller coaster. Earnings session's done. Straight fuckery. Yep. Someone was saying like, Nvidia must have found a cure for cancer. I found that hilarious. It was funny. I think it was John in the chat. Zero DT lotos would have been crazy. Yep. Now I can delete this BPR since it's violated. I mean, right now, in terms of like executing anything, the only game plan could be like a 1 minute market make it sell model for a scalp short, but other than that, pretty much, you gotta be flat on the day already, unless you're long since the morning and holding it on there. We have a hourly BPR, the price can't reverse inside doing silver bullet. Let's check. Let me take a look at that. I'm assuming you mean here. Yep, the hourly fair value gap could be used for sure. Here, I see what you're saying. You meant this one. Let's annotate that and keep it on the chart. I mean, the question is like, how further down can it go though? Can it pull back? If let's say we form a swing high here, the Kyoto implied range would be this area. Could a week higher though, something like this. We'll see. I mean, since it's on the 1 hour though, forming a swing high here means it's not gonna be printed until 3 p.m. Because you need a wick, then one candle close lower than that, which is to the 3 p.m. candle, and the third candle is 3 o'clock. Let's see what this highs looks like on the hourly chart. Here, that low, yeah, the fair value gap is below that low. I'm gonna annotate that. Hourly fair value gap high. Let's see. Now we gotta just watch the price and see what it's doing. Your morning session low can be the target, but not for today. Yeah, definitely not for today. Today, like if you want to trade a pullback or if you want to see how further down it can retrace, you gotta wait for a 1 minute market maker sell model first so you can anticipate the pullback. I am gonna delete all that. Yes, stalling already here. What a move. Yeah, what a move. Looks like the mega flush comes 30 minutes before market close on stocks is my guess. Well, I mean, that makes sense. Looking at the hourly chart, like I just mentioned, in the last hour of the trading session, this might confirm a swing high here, and on the in the last hour, it could just retrace into this fair value gap here. There. But we'll see. We gotta get a sell model going on in the lower time frames for that. Let's check Nvidia. It's currently up 15%. I think Nvidia has been flat today after open. Yeah, pretty much. Barcoding. Tesla is slightly going higher. Slow burn though. AMD flat. Amazon looks interesting. I mean, yeah, during the New York session, the stocks are actually flat, but just the opening gap makes everything green today. Prints the daily open, low, high, close. Yeah, let's take a look at the daily candle real quick. So there's a rejection block here. I want to see how it reacts to that. And we mark the CE of this wick. Thor, good afternoon. I don't know if it is correct time now, but yesterday I was reviewing the PA of Prime's PM session on Tuesday the 20th. I saw an SMT on 4-hour candle from February 2 at 6 with 4-hour candle at 10 a.m. the 20th. If you go lower time frame, it is exactly 12:30. Going down to 15-minute chart, we encounter a small BPR. My question is, in this case, would this idea still be valid for the creation of a narrative of SMT plus market maker buy model in this case, or the SMT occurring is too far in time between swing lows? Gotta take a look at that. So I'm assuming you are on NASDAQ, right? Um, on the 4 hour candle, let's take a look at the 4 hour candle. So you're talking about this SMT, correct? Going from 2-2, 2nd February. Oh, here, this. Mm-hmm. At 6 with 4 hour candle at 10 a.m. The 20th here. That's another SMT. Gotta pull up ES for this. Okay. Alright. So the SMT is actually here. It's much better because it's close proximity. 10 o'clock. Where's 10 o'clock? 20 here. This candle. There's no SMT there. Both assets making lower lows. On the lower time frame, let's say 15 minutes. I think you mean these lows right here on the lower time frame, or are you talking about the bullish one, a bearish one on the highs here? 2nd of February at 12:30. 12:30 is right there. Oh, here, like that small area you're talking about. Here. I mean, on this time frame, it is not a. First of all, because you don't have an SMT divergence on this time frame yet, I wouldn't use that BPR. But if I go down to, let's say, 5 minutes, let's take a look at on the 5. Let me do this way so I can see better. I'm going to delete these things right here. So I'm going to go down to 5 on both assets. Here, that's the level. Well, let's see if we have it on here on the 5. So moving in time, the first SMT is right there. These lows. So Nasdaq is making equal lows, whereas ES is making a lower low. And then we have another one right about here. Nasdaq is stronger, making a higher low, right? Once you have the first one, now you can use the you can look for a market maker buy model and original consolidation. So you got to spot the original consolidation, which is on the 1 minute, right? After that SMT divergence, there's an original consolidation. You can target that high. That high should act as a drawn liquidity. So here, the first SMT at that low. So I gotta go back in time here. That's the low on Nasdaq. Right here. On the 1 minute. Once that SMT confirms, now you can take the draw on liquidity, original consolidation high. Mark it as your buy side, right? You have a dealing range from the high to low. You got to be looking for long entries below the range equilibrium, right? So let's go forward a little bit, see what happens there. Now you have two things here. So you have a BPR in the lower fair value gap, And a small portion of the upper fair value gap, the CB, also overlaps there. So you can use that as an entry, or this retracement into the fair value gap as an entry as well. Comes all the way down to the lower one. Rejection block there, here also. Taps there. And then goes from here, I guess. So this is your last entry. Let's say if you got stopped here, which I think I traded this, I got a break even here. This is your thing. I was long here, as far as I remember. I longed this candle specifically, got stopped on this retracement, right? That was my second trade, so I didn't trade it. But let's say you got stopped in here, right? That is your last entry. This fair value gap here is your last entry because price retracing back down into the equilibrium of the range for the last time here. So this is the EQ of the range, right? Retraces there. You have a fair value gap, you can utilize that. So this candle could be your second entry or re-entry, and then you target the draw on liquidity. So these fair value gaps, you shouldn't be considering those. Let's see, and then it targets the high there, or is the consolidation. SMC should be closer in time rather than using, so yeah, preferably it should be close proximity. So I would rather see SMT divergence here, right? Here, rather than having it with an old low like that. If that makes sense. Rather than using a swing low from 7 days. Exactly. Because the algorithm is not gonna refer to those old lows, right? And one thing about SMT, because I get this question a lot, like if one asset is printing equal lows or highs and the other one is making a, in this case, a lower low, right? You can consider that as an SMT. Those equal lows should be safe. That's how you'll know equal lows or highs is getting targeted or not. Because sometimes what happens is, like, I see traders think like, oh my god, we have clean lows, right? Then we displaced here, there's a fair value gap there. The lows, the equal lows should be definitely a target, but that's not the case. You've got to spot that SMT for additional confluence. So if there was no SMT divergence with ES at the time of the equal lows printing on Nasdaq, then Nasdaq could have just swept those lows, if that makes sense. You're welcome, Jay. I hope that answers your question. Let's go back to charts now. Gonna pull Nasdaq on the left. ES on the right. Let's do that. Alright, cool. I mean, so far it's still going higher. There is no reason to go short as of now. Could we find a bias today with signature and price? Let me take a look at your chart. Is this 15-minute chart? Okay. Strong reaction at that fair value gap. Yes. And spot the internal fair value, internal SMT divergence over there. So I'll show it on my chart for you. Nasdaq 15-minute and ES 15-minute. So in this internal range, you have Nasdaq printing a lower low, whereas ES is making a higher low over there. And with this candle close above these highs, this candle, that's the sentiment change. Now you're in a buy model, right? So you shouldn't be just like collapsing these fair value gaps here, or even these down close candles. You guys should be doing is basically within the first 30 minutes of the session, right, 9:30 to 10 a.m. You should be looking for these signatures, these signs, and get a direction or like a bias, have a direction bias going into silver bullet time hour, going into 10 a.m. So once it's 10 o'clock, you know that you're gonna go either long or short, but you gotta have a context back in your idea. So when at 9:30 a candle reacts strongly at a fair value gap, it's a good signature for a direction. Yes. Another thing is on the hourly chart, you also have this order block. So anything below that order block shouldn't be traded into. So all these imbalances, right, act as a breakaway gap. You don't want to see price trading back into there. Once this candle confirms as an order block, confirmed as an order block. Same thing on Nasdaq. Order block. So 6 a.m. candle violating its high of this down close candle, confirming this as an order block, right? Anything below that level should act as a breakaway from there on. And that SMT diverges on the lower time frame, on the 15-minute in this case, it just adds confidence. Now that this SMT is present at the time and confirms as this low gets confirmed as a swing low with the following candle, which is 945, right? Now you have the confluence, you have the direction that you want to be in, and all of that. From there, it was just printing higher. Because 945 candle is this one right there. This one, I think. No, that's 10 a.m. This is 945. That was news. And 10 a.m. candle breaking the structure to the upside, right? Changing the sentiment. Now you have even further confluence on the upside. There's a breaker here, right? Low here, low, high, lower, low, higher, high. You need to be aware of this breaker. Trades back into there. So on lower time frames, this is going to be look like manipulation, right? On the 1 minute, for example, it's going to look like manipulation here, and then rallies higher. If you look at this range here, it's going to be in the discount. Come on, here, it's going to be in a discount. Then you can look for PDRAs to go along in that area. For example, like you shouldn't be buying this kind of price action, right? You need to have a lower time frame confirmation, otherwise you'll get stopped. What you could do is once it's trading down into the 5-minute breaker in this case, you could just wait for this high to get broken, right? Once that high is broken to the upside, you can either look for fair value gaps or blocks, whichever PDR you want to use to go along. But like I said, never buy retracements like this, like that, thinking that it's gonna reverse or wick or whatever. Our live stream is recorded. Yes, I am recording. I haven't uploaded the AM session yet. I think it's rendering on YouTube right now. But once it's done, I'll be posting in recordings channel. So same thing here, right? Price made a move. This is our swing leg. Then on the 5-minute, it is actually retracing back into a fair value gap and an order block here. But you shouldn't be buying that. what you should be doing is you should wait for a change in the sentiment in the state of delivery. So wait for this fair value gap to be inverted first, right? Then you can look for long entries. For example, here for entry, is it better always enter after SMT? It's 1 minute chart. Let's take a look at that. Let me find that price action on my chart so everyone can see it. I think it's here. So you annotated. Oh, let me. Took this low to this high as your dealing range. Hold on here. We're looking at here to here. All right. And then there's SMT here. This is an indication. Like when you see this SMT here, that is an indication that if you're thinking long these lows, that adds confidence to your idea, right? Once it breaks above it, though, shift the structure, and you can safely enter. And the SMT lows right here, the lower low, shouldn't be traded into, so you can put your stop loss there. Is it better to always enter after? Yes. SMT, then a market structure shift is the safest way to do it. If you don't wait for market structure shift, depends on where you put your stop loss or how tight it is, you might get stopped out. So if you want to be safe, wait for that market structure shift with a displacement, preferably a fair value gap, then look for entries. And after you have this dealing range, better to put it in the chart. You're in the small range here, this one. I wouldn't be too concerned about that one. Because what happens is it's basically trading back into the equilibrium of the actual dealing range. That is also the 5-minute range, I believe. Yep, 5-minute dealing range. Once this high is taken out though, then you can change the dealing range. Now you have a new dealing range from this high, because it took the buy side, right? From this low. This is your new swing leg. So after that, you just move like that, basically. Once this high is taken, you wait for another new swing high, right? Now you have a new short-term dealing range here, right? Oops, not that low, right there. These are short-term dealing ranges, though, just so you know. You look at the expansion swings, the expansion legs. All right, let's go back to 1 minute. Now we're in silver bullet hour. There's nothing so far. I want to look how far are they looking right now. Like for me to enter any short positions as of now, it's basically just like either ES or Nasdaq taking the high, this high here, and ES not taking that high, create an SMT, and I would consider that as a short entry. It needs to displace lower first after taking the sell buy side though. Is it better to wait for 3 p.m. as 10 a.m. did not deliver and only begin to run at 11 a.m.? Yes. So morning silver bullet, I'll just mark it 11 and 10 a.m. Here, it's in the range, did not deliver it, started the run after 11 and lunch hour. So that should be the case, yes. He should be focusing on entries after 3 p.m. That also aligns with the hourly look. Because on hourly, you gotta wait for that swing high formation for higher probability trades. Let's see. Nasdaq is making equal highs. Yes, also, yeah. Yes, we're on the high right now. It is really interesting to see this keep running, even though we're up 3% on the day on Nasdaq and ES 2%. It is pretty wild. Guys, also, if you want to join the stream while we're waiting for the price action, I can take people in if you want to speak. Daymek, I'm seeing your request. I'm going to invite you. Hey, I'm good. How you doing, brother? Yeah, yeah. And I wonder how many people got just wrecked today and yesterday also in shorts. Yep, it's not giving any chance people to just mitigate their losses at all. Yeah, yeah, yeah. So he was, I think he was longing this price action somewhere here, or like this fair value gap. I don't remember. I think he longed this fair value gap. I can take a look. he sent me a screenshot later on. I'll see where he entered. Let's see. Where is it? Yeah, he longed that fair value gap here. I'll show you. Can you see the screenshot or no? It's a very good trade here. That fair value gap. So he waited for the structure shift over there. Once it happened, there's a fair value gap. He longed that. Stops below the fair value gap. Target at the buy side there. Oops. It's a pretty. I was actually having a discussion with him after the session. It's a pretty common pattern in Nasdaq in doing this kind of thing. Like the 1 hourly look here, like choppy morning session initially above the order block right here, and then rallying. But I mean, you can see what he waited for here. So he waited for that displacement first in the market structure shift. He did not like trade or catch this knife in the rally. Yeah. On the hourly chart, I no. I mean, yeah, I saw it yesterday or like overnight. Here is the highest probability drawn liquidity. That's the what is it? The original consolidation, which was taken during Asia, I believe. Yeah, like Londonish midnight at midnight. Um, and that was pretty much it in terms of high probability drawn liquidity. Exactly, exactly. I mean, like, I was looking at this price action last yesterday in the afternoon so during Asia. I annotated this hourly fair value gap and drawn liquidity here. That was obvious, but since it came out of the trading session I am focused on, no reason to be impulsive there to long that. But if I go on the lower time frame, what you'll notice is let me just make it bigger. This also kind of answers Matrix's question earlier today. Let's do this way, okay? It's a great example for market making buy models, sell models, both of them. So what I'll do is I'm going to annotate this original consolidation first of all. Okay. Then so this is a draw on liquidity, right? The highest probability draw. Then I'm going to annotate this 1 hour fair value gap, right? I'm going to go on the 1 minute chart here. Right about there. Okay. I'm going to show you what actually happens when price retraces into an intermediate time frame PDRA on the 1 minute. So on the 1 minute, it rallied, right? Created the hourly fair value gap, which is the red box here. And it retraces down there, right? Do you see what's happening over there? So you have this range here, right? You just pull them back into the most recent lower time frame swing range into the discount, right? Once it's in discount, you can clearly see the market maker model building up here on the 1 minute, right? The buy model on the 1 minute. So it's rejecting here, sharp return, collapsing these fair value, engulfing these fair value gaps immediately. So this area is the one BPR, and there's one more here at the lower portion of it. Uses those areas to go higher, right? Then violates these highs, so that's the sentiment change here, shift, and that shift also happens with a fair value gap, right? And you can annotate those fair value gaps here, and the upper portion. So the lower portion is IFPD always. This is the manipulation, and the higher portion is the accumulation, right? Long accumulations in this case, this portion, and then it keeps pressing higher into the drawn liquidity on the hourly chart, right? So that's how you can utilize different time frames. So the general rule of thumb for this is, I was telling somebody yesterday, where is my, okay, so 15-minute PD array into 1-minute market maker model, right? Then 1 hour PD array into 5-minute market maker model. So you can go like that, like 4 hourly PD array into 15-minute market maker model. You see what I'm saying? So what you want to see is, if you have a point of interest on, let's say, 1 hour chart, right? You annotate the PD array, then you go, once it trades down into there, you turn to a lower time frame, in this case 5 minute time frame. You wait for market maker model to build. Once it's there, now you can long and target your intermediate time frame drawn liquidity, right? So how you can do that is, once this low is set here on the market maker model time frame, we imply the range, right, to your draw, and you can do two things here. You look at the discount here in this buy model example. You can use all those discount PD arrays as a pyramid or just an entry. Once it trades above the equilibrium of that implied range, now you set your stop loss at break even, and any given PD array here, fair value gap, order block, whatsoever, you just disregard that in terms of like entries. You're not gonna, you shouldn't be entering any more long positions up in this area. If that makes sense. Now, let me pull ES just to see if let me see if ES had some sort of like SMT divergence here or something. I wasn't watching ES at the time, so I'm not sure if we have it. Wednesday, 9:30. 9:30 here. Here. So there's no SMT here. Nothing there. Nothing there. Nothing there. Basically no SMT with ES over there in the overnight session. Let me go further. I can actually close this. What do I do? So if you're swing trading, for example, and you have a monthly or weekly PD array target, right? Now a point of interest rather. Now you can, once it trades down into there, you can turn to 4 hour chart, for example, and wait for a market maker model to build first before entry. And then once it's there, you can start executing on it. Okay, so it comes back down into equilibrium. Maybe we have something here. So yeah, I mean, since it's overnight session, ES looks illiquid, but it's still there. So ES is making equal lows here. Nasdaq is making lower lows in that range. So that could be the trigger. But you know, I would prefer to see this kind of price action during New York session, obviously, because I don't like to trade Asia session. Or like, if you want to trade Asia session or London session, you can just trade forex currencies like GBP, USD, and stuff like that. because it's the same. Price is the same, right? And time is fractal. You're gonna see these types of things in any assets really. If you're trading stocks, you're gonna see it there. Forex currencies or anything really, commodities. Nothing changes basically. If it makes sense. Do you have any questions about this or anyone really? Let me check the chat real quick. 1 second. So in this example, you showed MMXM with 1 hour intermediate time frame, 5 minute, 1 minute lower time frame execution. But what was your hypothetical HDF reference? Thanks. So HDF reference, you mean my target and PD area, right? Is that what you mean by the reference? Do you have an Asian model you like to use? No, I do not because I really hate looking at Asia range. The best entry would be in the discounted dealing range, yes, or EQ. Like that's the latest you can enter equilibrium of the range. The first one you draw from the expansion in 1 hour. Yep. You'll get the best long entries in a discount and best short entries in a premium. And if you enter at EQ, you gotta be accepting the fact that you might get chopped. I meant high time frame market maker model or drawn liquidity lower count. Okay, yeah. So the drawn liquidity, I got it from the hourly chart here. So what I was doing is basically let me go back in time here to this candle. So the moment I saw this structure shift here yesterday, I was scanning time frames. Like I started from 4 hour. Now on 4 hour, I was looking at potential or high probability drawn liquidity, right? For that, I like to use original consolidation because that is the highest probability drawn liquidity or the easiest to see also. Now on 4 hour, as you can see, there are no original consolidation, like a clean one, right? Because of that, I dropped onto 1 hour. And on 1 hour, I spotted this price action here, which is the original consolidation. It's going back and forth, back and forth, back and forth. And then once it breaks away from it, breaks to the downside here. Once it does that, it just breaks lower and lower and lower. So that is the consolidation or accumulation that causes a distribution, right? So that's my original consolidation. Once I have that, I know the buy side of the consolidation will be my market maker buy model drawn liquidity, the highest probability one. And depending on how price moves outside of it from above, it might target these highs later on, right? So because I have the drawn liquidity on the hourly chart, now I need to be aware of this specific time frames PD arrays because essentially the market maker model is on the 1 hour chart and algo will refer back to the relative time frames PD arrays. So going further, the first area, the first PD array just formed. This is the first fair value gap, right? So that's my first point of interest going into here. It could just come back here and uses that as a catalyst to go target the buy side there. And then, still waiting, the second fair value gap here, and a potential order block because this candle closed as a down close candle, right? But it's not confirmed as an order block until the next candle or the next candles violates its high, right? So our price can still come down here into this fair value gap. And it does so here right at open of that 1 hourly candle. Once it's trading into the fair value gap, now you can switch to either 5 minutes or 1 minute and wait for the sell buy model to form. Now, if the original consolidation was on the 4 hour, I would have done the same thing on the 4 hour on the relative time frame. So I basically prefer to go step by step, time frame to time frame, exactly. Once I have the draw, once I have the market maker model, and once the price is trading into the point of interest, my potential entry level, then I switch to 1 minute, 5 minutes, those lower time frame, lower time frames for entries. Because like personally, I don't like to enter on 5 minute time frame because the stop loss will be way too large. You know, the key thing is you gotta be switching time frames until you see the clear consolidation. So this could have been on any time frame really. Like this could have been on for hourly, like I said. Once you got that, then just stay on that time frame and be aware of its PDRAs. Now there's also like this order block here, right? Bearish order block. So on the south side of the curve, this was used as a bearish order block. Now it failed. The close of that order block will be reused on the buy side of the curve. It taps there and rallies. You can use those levels as well. Like let's say we didn't have a fair value gap here, right? I would have used that order block, draw it in time, and use that in the buy side of the curve as well. But it has to be on the relative time frame of the market maker model. So I wouldn't. So if I go on to 15 minutes, for example, there's this order block here, right? I wouldn't consider that. It's because it's not on the relative time frame of the market maker model. All right. Any questions about this? Otherwise, I'm going to see what's going on in the market right now. And also one more thing, since I mentioned it earlier, like how can you know if this will keep pressing higher and higher? There's a general rule for that. So let me annotate this better. Original consolidation draw, right? So in market maker models, once it's completed, what usually happens is this buy side is rated, right? Then price likes to consolidate here above before doing anything else. Now this range can be either traded outside to the downside or to the upside, right? What you could do is if this range is broken to the upside, now you can look for these highs as a target or these PDRAs as your point of interest targets, right? If it trades below that range, that means it's likely setting up for a pullback into these PDRAs, or there is another market maker sell model formed within that range. That's how you could anticipate if it's going to keep going higher and higher. Now, if I turn off the replay mode, let's see what happened there. You see, above that level, there's no consolidation. So I have I don't know if I can find it, but a chart showing that better. I think it's here. Yeah. I'm gonna change the screen so you guys can see it. Give me 1 second, guys. Here. This is a typical. This is how usually a market maker buy or sell model, in this case sell model, looks like. Original consolidation. The sell model completes once the low is taken out, right? And if price wants to retrace from that level and target the highs again, that means the algorithm has to generate liquidity at these low below that sell side. So it's going to consolidate first, then either going to retrace, right, or it's going to reverse. It's not going to be like consolidation, expansion, consolidation, expansion. It doesn't happen usually. It has to retrace first if it wants to keep going lower. So the clue here is You wait for the original consolidation. So you wait for a consolidation below this level, right? And whichever direction it breaks out first is usually the direction or the bias that you'll be looking for. So the high, in this case, like if it breaks out above, now you can target these highs. EQ of the range, be mindful of that level. If it breaks lower first, that means it's going to be a continuation. All right. Well, let's see what's going on with the market. We're still up 535 points. That is insane. I'm assuming there is nothing happening during Silver Bullet right now. I would not consider these very valid gaps just because actually that's equal highs. Could consider that as an SMT divergence. Oh, this is also equal highs. Never mind. No SMT divergence just yet. That's why I wouldn't consider these fair value gaps. Buy model in the making. Uh, Might be. I mean, not today, but overall, yeah. And this is a low probability sell, might be a sell model with a lower probability because no SMTs. There's this breaker here, just violated a little bit. Only yes, it's right about there. This is not the setup I would take personally. Let me take the micros. Micro ES, not that equal. It's still equal highs. Micro Nasdaq. Yep, equal highs. Way too suspicious. Let's take a look at YM. Yeah, my YM made a lower low. I mean, the thing is though, both assets making lower high equal highs. It's just like it makes it low probability. So I'll look for this range here and see how it reacts from the EQ. Let's see also if Nasdaq could take this low out. For me to go short here, I would rather want to see something like this Nasdaq trading into this BPR here, there, and ES making, or vice versa, ES making a sweep at the same time there, then I would consider these highs safe for Nasdaq, or vice versa. But as of now, those highs are not safe. At any time, it could just expand there. Yes, leaving this low is also. It's not there just yet for the sell model on the 1 minute. Two five. Oh, you mean a bullish SMT? Five. I can't find two five. Oh, here. Yeah, it's making a lower low, and ES is just making a equal lows. Yep. Here to there. But like in terms of execution, anything inside of there, it's just basically nothing there. Like no fair value up. Maybe you could use this propulsion block as an entry point, but like again, we are already overexpanded for the day. So way too risky trades, but definitely scalpable though. Like, but what are you gonna target, right? Like the C of the daily wick could be the target. I want to see Nasdaq getting into this fair value gap and maybe forming a bearish SMT on the 1 minute with ES, since ES is weaker as of now. Matrix, I just accepted your request, but I don't know. I'm not seeing you in the speakers right now. I don't know if you canceled it. By the way, I gotta say this, Matrix. I am loving your questions. Your questions are next level. Next level. I love it. I love your thought process. Oh yeah. ES took the equal lows. Let's see if it can confirm an SMT divergence there. Hmm, yeah. I want to see Nasdaq rallying here. Really, I'm not trading into this low just yet. By the way, King's Blend. Now that I'm reading your question one more time about Asia model, I was working on catching London highs or lows on the trending days. Um, and what I realized, I couldn't find a specific model, at least just yet. But what I realized is usually on Thursdays, so Wednesday mornings and Wednesday nights through Thursdays, usually the London highs or the lows is the low of the day or the high of the day. So if you can find a model to just like catch the London high or the low overnight, you can literally trade the entire daily range. And it usually happens on Thursdays. Just like today, for example. It's a great example, actually. I couldn't find a way to do so, though, just yet. Because wouldn't it be like great to just like, in this case, like in when we are in a bull market, let's say, wouldn't it be just like beautiful to just long the London low and hold the entire day? It would be so cool. Afternoon live class just humbled me on what it meant to be waiting. Yeah, in afternoon sessions, you gotta be extra cautious, and before entering any trades, you gotta ask yourself questions like, does it really want to go lower? And why should it go lower in this case? And change your perspective before entering. Like, I want to short here, but what are the chances of this going for the highs, right? Before entering. I love London session. It's so easy. About to quit my job and trade at midnight. God bless you, dude. Like, there's no way for me. I don't know how you keep yourself awake during London session. To be honest with you, the daily or the weekly, yeah. And I'll show you this in standard deviation class. There is a way to anticipate the whole week range, whole weekly range on trending markets and the whole daily range as well. Again, on trending markets by using standard deviations. That comes handy in options trading, honestly. When you know the daily range, you just buy at open and hold it the whole day. if I didn't work, I would go to bed at 3, 4 a.m. all from gaming. Do you like the new Counter Strike 2? I've never played it, but I've heard bad things about it. I was gonna say you can catch sometimes high low using STD, but the opportunity doesn't present itself often. Yeah, it gotta be aligned in alignment with a couple of different time frames, including the higher time frames. So you gotta be aligned in alignment with the daily, right? Then the 4 hourly. I think all of them has to be all together in sync. Then you gotta time your entry during London session. Not an easy task. Sunday nights, sometimes I trade London because I work from home on Mondays. Dude, Sundays are very suspicious, very, I don't know. I don't know how you do that. Sundays are scary. We're heading into 3 o'clock. Let's see what happens. On the hourly chart, we still don't have a swing high. And that to me making the last hour low probability, but we'll see. Because like until you have swing high formation confirmed, sky is the limit, you know. Let me fix that. In the meantime, I'm gonna grab water real quick, guys. Let's see what's going on here. The new hourly candle is open. Hey, you. Oh, Diane, I'm taking you in. Wait, no, yeah, I traded in the morning. I took a short which ran like 30 handles or so, then stopped me in pretty much break even, slight profit. See if it can break lower. Yeah, if I see something, I can trade one more time. But I would rather like be long at around these levels, not at equilibrium of the range, because like yeah, you see the reaction from the range EQ is way too strong and inverting that 1 minute fair value gap there. Here, let me take a look at the hourly chart. Let's see how it closed. What about you? Did you trade today? All right, that's the best trade though. Yep. I think once the monthly candle closes, it'll be cleaner. But that's the best trade. Like being flat on the day is the best trade you can do. I always tell that. Do we call that equal low on ES as SMT to that Nasdaq high? Let's take a look on the 1 minute. Yeah, that's true. Yeah. Oh, by the way, congrats on passing the evaluation. I saw your certificate earlier today. Yeah. Yeah, you should follow your analysis without being emotional. You gotta be numb to price action, right? Exactly. You gotta close it because like, yep, yep, yep. And TJ, that is a bullish SMT divergence. Yes, we should be short lived though. I'm thinking like Nasdaq taking the high. Yeah, Apex's trading drawdown is terrible. Yep, you gotta be more conservative with your take profits and stop losses for sure. The good thing about my final features is though, although I'm relatively new to the company, is I heard their payouts are very fast. Like you get a payout in the same day you request, which is good. You know, who likes to wait for his money? Oh, you have a own forex account? For sure, yeah, yeah. A little bit of divergence there, but I would rather see the equal highs getting taken out just to be safe in a short position. Here's the hourly. Did anyone take any trades today? I'm gonna create a channel where you guys can post your winners and losers and stuff. And I'm gonna also create a channel for member charts. You can just like post your technical analysis in that channel or discuss what's going on, stuff like that. Try to short at midday with small profit. Okay. King's Blend profits. King's the 10 contract blend. I want to see the ES like coming up here while Nasdaq running the highs. ES stalling here, then taking the equal lows, giving Nasdaq the opportunity to rally lower into the 1 hour fair value gap or the south side here. Yo, Kingsman, which firm are you using? I know you were with My Funnel Features. Do you have any other accounts like Top Step or Apex? I have a few Top Step. So you have all of them. Nice. Do you have any fundeds right now, or are you at eval? My Funnel Features 50K starter or expert? Which one? Nice. No, I don't hear him. I think he just left. No. 3,600 profit today on My Funnel Features 50K expert. Nice. That's fire. I could have left my runner go another 50, 60 points. That's fine, you know. You made money. Doesn't matter how much you make. Close mic. I thought you muted yourself, dude. Come back if you want to speak. I'm pretty chill because I'm calm at this stage of my journey because like I know that if I'm right, I'm right. If I'm wrong, I'll either be break even or in small loss. Like earlier today, I rolled my stop into break even because I knew if price comes back there that I'm wrong, you know. I was pretty chill about it. I'm usually like that. Yeah, I built that skill over time though. Initially, I was very emotional, cutting my winners very like earlier, or like moving my stop loss and stuff like that. So it was not easy to get here, but it's really worth it. How long have you been trading? Yeah. So hold on, let me just answer these questions real quick. How long have you been trading and how long to be profitable? So when it comes to becoming profitable, everyone will have a different journey, right? Some people gets it real quick and progress is real quick. They become profitable within a year or so. Others, it can take 5 years, you know. It all depends on how much time you're putting in and what are you doing outside of tape reading or trading itself. Like, do you do back testing, journaling? Because all those things will improve your trading at the end of the day. And for me, I've been trading since like 5 years or so. I started with so my background is actually stock options and crypto after that. I started with stock options. I was trading chart patterns. I don't know much about them and quickly realized it was not the way because I was losing money constantly depositing money to my Weeble account. Um, Probably a year after I got introduced into smart money concepts, which is basically I was basically trading liquidity and supply and demand a little bit. That worked kind of good. I became profitable with that model, but I was not at this level of profitability. But I was introduced to ICT um, with this 2022 mentorship. It was 2 years ago. Studied him 6 months or so very intensely, and it changed everything. Thor, is this a low number of trades for the week for you? So yeah, I took how many trades? 3 trades this week so far. It is pretty low. Usually I don't go over five though, 5 or 6. I don't count it necessarily, but now that I'm thinking about it, um, I don't I don't take usually more than 5 or 6 trades. For me, it's like basically if on Monday I take a win, I stop, right? That's my first trade. Second trade Tuesday, if I trade and take a win, second trade. So basically, one win, I stop, or 2 losses, I stop. And I count break evens as a loss. So if I have one break even, one loss, I stop. Like today, um, I got stopped in slight profit, and I'm counting that as a loss. So if I take a put a trade on right now and get stopped, that'll be the second loss for the day. You know, Thor trades with his Vipers on. I want Joe G Vipers though. Vipers are cool. Yeah. Yeah. I don't know him though, yeah, but I've seen his Twitter. Hmm.